You know,
Yeah.
the whole thing is artificial, in my opinion, and it won't last very long. My view is we are at turning points. Yes, but it's been strong against other currencies, but not against an honest currency like gold, silver, and platinum. Okay, platinum is a special case, but gold has appreciated against the dollar essentially since 1971. In 71, we were at $35 an ounce. And now you need 2,650 or so dollars to buy an ounce. We have this downtrend in the purchasing power of money, and people should not kid themselves. The purchasing power of money has gone down much more than the fraudulent Bureau of Labor Statistic compiles. The cost of living of ordinary people has gone up much more than what they show that inflation is. Same in Europe, by the way. Same in Switzerland. In Switzerland, they claim we have no inflation. BS. We have inflation. Everything is so. Everybody who goes to Switzerland says it's very expensive. Yes, it is very expensive. I'm ultra bearish about the dollar. You understand? But I'm an investor at the same time. So most of my cash is actually in dollars. And I want to explain to you and your viewers a funny fact.
Please.
Some of my portfolios I value in dollars. Some of my portfolios I value in euros and some in Swiss francs. Now, you would think when the dollar goes down that it is good for my portfolios because it's value in euros. No. My portfolios appreciate when the dollar strengthens because I have holdings in dollars. I value different portfolios differently, so I can always sleep happily. When I look at the price level in the US and the price level elsewhere, the US is grossly overvalued. Grossly.
Yeah.
But you are right. You know, the dollar, if someone said to me, Mark, you have a choice, you can keep all your money in Thai baht. I live in Thailand, in the north, in the Golden Triangle. You must keep all your money either in Thai baht or US dollars. Where? I would say if the choice was, you have to keep it all in dollars, gold, or in Thai baht, I would choose gold. I think at the present time, as I hinted earlier on, the US level of asset prices is extremely high. And I want to emphasize the high level can be measured at, say, the housing market.
Yeah.
The housing market in America is very interesting, economically speaking, because prices are up in the sky. Now, you would think that in a bull market where prices are high, the volume of transactions is very high. No, it's low. Why? Because the affordability is at the lowest level ever. That tells me that the price level in America is high and in other countries relatively low. The central banks have created a huge problem for themselves looking at the asset markets. They should tighten. But because monetary inflation impoverishes the majority of people, so because the majority of people is impoverished based on economic fundamentals, they should probably cut interest rates, but not based on the asset value. The asset bubbles are there, real estate, stocks, everything. Someone, an outside observer would say, looking at the financial markets, would say, you're crazy if you cut rates here. On the other hand, if you look at 80% of Americans whose standards of living have been going down, they should cut rates.
I know.
But that's the dilemma. The cut rates, financial markets go even higher and the property market goes even higher. And it diminishes the purchasing power of people. I mean, this whole thing is summarized very well in this book, The Economics of Inflation. I may have shown it before, but it's a reminder. This is, I mean, really the seminal work of economics about inflation. This Bresciano Turoni became a professor, but he was working in the Reichsfinanzministerium in 1918 to 1922 in Germany during the hyperinflation. And he wrote different chapters about stock prices and about currencies and about the social implications and the concentration in industries. This is the Bible about the impact of monetary inflation on everything. When Ben Bernanke embarked on QE1 in December 2008, they asked me on TV, what my view was. I said, once you embark on monetary inflation, it's practically impossible to stop it. It can be stopped, but the pain is such that every democratically elected government will prefer to postpone the major pain by printing more.
Yeah.
And in my view, we may have, like in the 70s, waves of inflation, and then prices came down again and so forth. But in general, the governments in the Western societies, they're so deep into fiscal deficits. Now, the fiscal deficits you could solve. You can go to the people and say, look, we have to increase taxation. I'd like to see the politician who gets elected when he tells people you have to increase taxation. Second solution is to say we have to cut spending. But as you know, in America, most of the spending cannot be cut. It's mandatory. And the third solution is to default. They can default. But it's very messy because there's so many foreigners, and the pension funds in Canada, among friends and so forth, that own treasuries. So you would have to default and say, oh, all of you get paid and all of you don't get paid. But that would be the end of the dollar as a reserve currency. And then there is the easiest solution. And this is acceptable to most people because most people like the government to implement policies that are inflationary because they don't know that they are inflationary. But once the inflation happens, they don't like the inflation. So the dilemma is what leads to inflation is well liked in a democracy, but the inflation per se is not liked. And specifically consumer price inflation. People like inflation in properties because property prices go up. They like inflation in stocks because the financial sector gets richer and richer, including Marc Faber. We are in a stage where it will accelerate and it won't last another 100 years. There's not going to be that way. Because once you embark on monetary inflation, once the recession occurs or is perceived as a recession, you said the economy is expanding. Yes, the economy is expanding because the government collects tax and prints money. It sends this money to households to let them afford to go to Walmart and spend money at Walmart. And the shareholders of Walmart are not the poor people, but the capitalists, the rich people. The whole thing is artificial, in my opinion, and it won't last very long. My view is we are at turning points because at this stage, if you print money, you can probably maintain consumption at a certain level, but the price level will go up if you increase the quantity of money. And we are in a stage where if you print money, it is likely that the price level goes up at a faster pace than nominal wages. In other words, real wages, real economic growth is negative. When someone tells me, look, GDP is up 2% per annum, I say it's up 2% per annum if you use the methodology of the Bureau of Labor Statistics. But the private economist says, someone like John Williams, according to him, at present time, the cost of living is increasing at more than 10% per annum. And there was a lady, she sent me about a letter from her health care provider. And I have the letter, I printed it in my report. Her cost of this insurance is going up by more than 90% over 3 years. 90. And the government has the audacity to tell people that healthcare costs are down over the last 3 years. This is a lie, a blatant lie. But the Wall Street economists do not point this out because Wall Street loves money printing. The asset value goes up and the profits go up. It's the industry that supplies the Fed chairman. Wall Street supplies these guys. Wall Street benefits from money printing. They were not forced to do it. This is by design. They overlooked the fact that when asset prices go up as much as they did in the 1980s, 90s, and now in the last 20 years, that this is some sort of monetary inflation, the origin of it. And then they always encouraged asset price inflation, but they can't control where it goes and they can't control the consumer price inflation. So they are now in a very difficult position. In my view, they can solve the problem, but it's very painful for at least 5 years. The other less painful solution is to keep on printing. Well, Milton Friedman, he was very skeptical about central bankers, and he thought the computer could do their job. Artificial intelligence could do the job much better than they do. That is for sure.